Let's take a look at some legacy charts for BraveNewCoin. First of all, why do we even care? Well, the bigger crypto gets, the more it is tied to the people with all the money, the people in legacy, the more it's tied to sentiment of those markets. So it's important to watch. The second reason is a lot of these companies are starting to buy crypto. They're starting to hold crypto on their balance sheet, and they are starting to correlate more and more with crypto, MSTR being the biggest example of that, but specifically Bitcoin. So it's important to just get a survey, a look-see at what's going on in the legacy side of things, because you don't want to be blindsided with some down move or up move out of nowhere where you could have easily seen that coming if you were paying attention to what's going on in the legacy. Generally, crypto's risk on. I don't think that's a debate. People want it to be risk off. It is a hedge against inflation, a hedge against the world blowing up maybe, but ultimately it's correlated with risk on vehicles like the SPX and the NDX. Over here's the 30-week rolling correlations between SPX and NDX, as well as the Nikkei. And you can say, well, these aren't perfect. For the most part, we've correlated extremely closely with the SPX and NDX, and these correlations currently are growing after briefly being negative. Both the SPX and the NDX, to me, just look like no top, infinite up, could let the good times roll currently. So to see growing correlations to me is a good sign. Obviously, you can say this is lagging, this is meaningless, whatever, I get it. But if something else is roofing and we're correlated, awesome, And the DXY we're still correlated with doesn't really make sense. The correlations in general right now, in a microcosm, if you were to take a core slice of what's going on here, none of these correlations really match anything. We're not correlated with gold, which is okay because we're not supposed to be. We're supposed to be risk on, but we are correlated with the DXY, and that's growing. How we can be correlated with the DXY, the SPX, and the NDX, how all of these can be correlated doesn't really make sense in the grand scheme of things. The VIX, probably the most important correlation, honestly, is continuing to decline. And as the VIX declines or has declined historically, BTC has done well because this represents a risk-on mentality. This represents people willing to take chances on non-safe, super strict vehicles like bonds or gold, right? This is a time while the Fed is doing what the Fed's doing for risk-on across the board. Hopefully the VIX will continue to decay and trend towards sub 10. If you look at the numbers, we've always done best when VIX is even lower than it is now. So it's good. Everything's headed where it's supposed to be headed. I didn't look at the Nikkei this week specifically, but that correlation has pretty much decayed to nothing. The 10-year has decayed to nearly nothing. And the gold correlation is actually rising here. DXY, I say this every week, but we're better off if the DXY does nothing until January. Historically, if the DXY is bullish, we are not bullish on BTC. So you don't want to see a bullish DXY. Unfortunately, based on trend, this is telling you it was setting up for a reversal with this chart pattern, this double bottom. The cloud is telling you it was a reversal. We broke the neckline or the resistance level here, and that was a reversal sign. We're in the cloud now with a bullish TK cross that is more reversal signs. The measured move for this chart pattern is 96 to 97, 98. That's probably where it's going. The question is, can it just hold off to January, to Q1? Because my mindset is crypto is bullish in Q4, bearish in Q1. We're not bullish crypto if DXY is bullish historically. Not saying it can't happen, just saying historically. It's not a good sign if DXY is bullish. And the last thing here on the trend is this is an edge-to-edge move on cloud in a vacuum. The expectation is 96. That's where this is going. So it'll be interesting to see if the DXY and BTC can both be bullish at the same time. But historically, that hasn't really happened. Switching gears to gold, not much to say in general, just sort of sideways. Still has that triple bottom inverted head and shoulders, still above volume support, but it needs to break 1820-ish to really have a chance at a breakout. You can see the RSI just kind of flat here and waiting. It's not too much happening on the gold front just yet. I looked at where the SPX could go using any tool I have. We can use fibs, we can use fib extensions. I really like the MA multiplier, so I'd pop this on. This is the 365 month MA multiplier. So it would be the 30-year multiplier is basically what I calculate that to. So down here's the 30-year MA. And up here is the 5 times the 30-year MA. This is suggesting a potential move to 8K from here, which would be almost a 2x still, which would be insane. Probably the more reasonable likelihood is the 7-year half MA. So this is down here is the 7-year MA. This is 5 times that. And then this is the 2.5x if my math is correct. So I'm just looking on backtesting, what does this even historically match, right? You can see from 1955 to 73, we were at the midline here on this. We tapped the top in the 2000s, Great Depression over here. So we're kind of like crazy inflated on this. And then on this 7-year 2.5x, it looks like it's around 6K. So we got a ways to go even still. No matter how I try to look at this, there's still a bit of a ways to go. And this is important because if this tops out, that's probably the top for crypto as well. You can see where we hit in the roaring 20s here on the 2.5x multiple. And you can see where in the Great Depression, we were actually, below that 7-year MA, and we were below that in Corona. No, sorry, that's not Corona. That's 08 meltdown. So interesting how this historical stuff lines up. Obviously, it's just trying to read the tea leaves, but I'm just backtesting on the math what fits and what doesn't. So it looks like the highs are getting closer, certainly. NDX on the 365 weekly, which is, I forget what the calculation was, but you can figure it out. 365 divided by 52. That's how many years this is, but this also looks like it has a decent ways to go, even still. You can see the 1990s, you can see 08 on here as far as the buy zone, sell zone. So this still looks like it has a crazy way to go, and you can see how just slowly this has crept up since 08. Plenty of space there. GME on a much lower time frame on the daily, this thing looks phenomenal to me. If I didn't know what this was, if I didn't know anything about the company or have any bias towards what happened in 2020, 2021, just looking at technicals, this thing has a failed head and shoulders breakdown so far. It's above the right shoulder, so that's the technical criteria for failing the chart pattern. It didn't break down where it should, didn't break the 200, didn't break, let's say this is a triangle, which is what I've drawn out, didn't break down from that. Measuring this out from bow to stern here, you get a target of 500 basically. So this looks phenomenal, which is scary to think. And if this does have a run to 500, that will also likely be good for crypto, good for anything listed on Robinhood. It'll be good in the extreme near term, because ultimately all this stuff is going to crumble down, most likely. But it'll get people trading on Robinhood again. It'll get people, retail specifically, excited about trading. A lot of the GME run-up was certainly fueled partially by retail, but ultimately it was hedge funds eating hedge funds. It was the hedge funds that saw blood in the water on short squeezes, and that's how this happened. So if that criteria is ripe again, I think this easily hits 500. I don't hold any personally. I'm probably not going to end up trading this, but technicals look phenomenal. For AMC, it's definitely more murky. I don't really see anything that sticks out to me in particular. I don't see a chart pattern necessarily, head and shoulders. I don't really see anything going on here. It definitely doesn't look like a trade setup relative to GME. BBBY, I just had to talk about because it had this crazy move the other day. I don't think this is tradable in any means whatsoever. But the meme stalkery, the pajama trader, Robinhood, whoever, is back at the table. It took basically a full year to restart that. And you can see really the biggest thing is that the 200-day moving average on GME caught up with price. GME exploded from 4 to 300, and the 200 is back there right now. That is a full mean reversion and then some, allowing the mean to catch up. That's another reason why I really like that trade. This did actually mean revert the BBBY. Mean reverted on a candle wick, but hasn't held that level. Just a giant mess. They announced buybacks and some other typical shenanigans to goose the chart there. Here's Robinhood, which hit all-time lows or very close to it the other day. Adam and Eve at the bottom here. This is the 1 hour. You have to look at these lower time frames when there just isn't a lot of data. This thing just started trading in August, but hit some volume support, got a pattern support. Ultimately, this thing's back above 40, and you're seeing GME take off. I suspect Robinhood's going to take off as well. I suspect this thing's going to reach for 50 if the trend metrics can flip bullish for the first time ever, really, aside from late September here. A lot of things would have to line up correctly. They would need some clarity on the payment for flow stuff. They would need to probably list some more crypto stuff. But this is what I'd be watching for on technicals is a break at this 40 level where previous support became resistance currently. Coin absolutely roofing. I was shocked when I looked today. It was 344. It's doing well because it's crypto. It's the embodiment of crypto. Is it going to outperform ETH, BTC, Solana? I don't know. Probably not, but it's done really well. It's got a ton of volume up here. It has a rising wedge bear div, so it's not really something I don't want to jump into at this level. I like buys at like 300, 250, 265. I don't think it's going to get that low, but this is definitely a TKC clamp on the 4 hour, so this should play out fairly quickly if it does break down. And just as these were bullish, down here, patterns, divs, the expectation is definitely not just a explosion to the upside for the people who are telling me rising wedges are bullish. I'll look at Tesla in a second, and that was a rising wedge that exploded to the upside, but that's certainly not the expectation. Here's MSTR. I said, or have been saying for weeks, that if crypto hits a new all-time high, BTC, ETH, whatever, this is easily going to break 800. So I still think that. I still stand by that. Tons of volume came in here on the ETF stuff. I think if BTC continues its course, which it should, MSTR should have no problems retesting all-time high by the end of the year. And we're gonna just get more and more ETFs. There's 40 pending. Some of those are going to get approved. Most of them are not going to get approved, and that's certainly going to help MSTR as well. Here's Tesla 4 hour. It did have that rising wedge, like I talked about. Had a subtle bear div, I guess, at the time. Anytime you see equal RSI with a rising price, that's typically a bear div. You could argue it got canceled out towards the end. This did end up curling up with a ton of volume at the top. I think it has the highest call volume on anything in the stock market right now, any equity. So basically, it's a super crowded trade that's worked out for everybody and is primed for a reversal. So I think fundamentals of Tesla are not great, but the market doesn't care. I wish the fundamentals were better. We need EVs, we need all this other stuff, but we'll see what happens when it happens. Ultimately, it reached its target if you're measuring the high to the low, the previous all-time high to the local low. It's well beyond that at this point. So if I was trading this on a technical level, I would definitely be out if I was holding anything from 550 to 800. Can this thing keep going? Always, right? It can go to the 2618, the 3618, the 16618, whatever. But based on math, probability, backtesting, this thing more than likely starts to bear div and then gets a little loose and relaxes a bit. You can see where the 200 period moving average is all the way down here at 800 on the 4 hour. So it's definitely in Moon City right now. Square on the daily continues to have this downtrending RSI, which is holding it back. It's threatening a 5200 death cross. Square holds a ton of crypto, which is the only reason why I'm looking at this. And it kind of has a history of sort of marking up and then just 2 years of nothing, right? So it's not unheard of for Square to just kind of be silent on volatility until kind of mid 2022. Twitter, on the other hand, looks like it's setting up for a death cross here. Previously, it had this inverted head and shoulders potential. That didn't break out. Just continues to sort of disappoint, break down lower and lower and lower. You could argue a bull div growing here, lower lows in price, equal lows in RSI. Not a ton of support until sub 45. I still have some personally. I'm holding on to it. Just kind of is what it is. But it definitely doesn't look as breakout bullish as it did on the other day. And if you ever want to look at more treasuries that are holding crypto, there's a full list on bitcointreasuries.net. Publicly traded companies, private companies, governments, ETFs, everything. It's all listed here. Then just to round it out, I want to talk about Grayscale because they have an ETC product, just like they have a BTC product, that is currently at a 55% discount to spot. So it's really hemorrhaging value. And the question is, when does Grayscale step in? Because they're still collecting that 2% management fee per year or whatever it is. So is anybody else holding this besides them? Like, do they not care because they're the only ones holding it? I don't know. But there's a clear disparity between the ETH discount and the ETC discount. I like watching this to see generally just how bullish legacy is. The people buying this are buying it for reasons that most crypto people aren't generally aware of, either taxes or regulatory reasons, or it's just ease of access, right, for legacy people. So you're probably going to see this ETH discount flip positive if ETH actually gets much more bullish than it is now. You'll probably see the BTC thing discount here flip more towards positive as well. But it's hard because BTC's got the ETFs now. So I don't know. It's a bit of a mixed bag, but I definitely would watch this on a weekly basis just to see what's going on there. And then the CME futures contracts, we had a rollover the other day. Didn't really affect price too much. We're currently, let's see, midway through the August, well, more than midway through, I guess, August 3rd to January 31st contract. We have an expiry December 31st. So for me, those are the big two. What do we look like going into the end of the year? What do we look like going into the first month of January? The expectation is we continue just this massive push towards crazy highs until the end of the year, and then it's just death immediately leading into January, end of January. So this could, for example, on this August 3rd contract, close flat, which would mean price returning to 38K by January 31st. And arguably we have some precedence with that already on some of these contracts where, I'm just trying to visually find it, here it is, the March 3rd to August 27th, there was a lot of volatility here up and down, but ultimately we closed flat on that contract. Not something that's necessarily tradable, but something to consider as we get closer to those days. And you're going to always see volatility around these rollovers. That's just generally how things go, the bigger they get. Lastly, I'll just mention the ETHBTC fund and DeFi portfolio. I trade for TechMe Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults I'm in here on YearnComp and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.